Hello everybody, it's 12:30 UK time, the 5th of September, and I've got something new for you, something new to add to the itinerary of the regular analysis that I've been doing. It's Nat Gas, US Nat Gas, very big, highly traded market, futures, options, the spot, and also in the world of the day trader. They like to play it through various means, maybe stocks, or CFD, spread bets, a lot, very popular, like I said, and very important market as well for many reasons in our own personal lives. But like I said, this one's going to be added to the itinerary because I trade it a lot myself, and we've got a lot of excellent analysis to get through for you today. So let's head straight into that analysis and what's been going on with the Nat Gas market, and let's add some screens in. First of all, let's share the screens, and we're going to go, there we go. Let's just see how Nat Gas has been performing compared to its peers over the year so far. And unfortunately, you can see Nat Gas right at the bottom there, down just over 50% over 2023 compared to oil, WTI up just over 6%, and orange juice up there at the top, 55%. So what has been keeping that price down? Well, I suppose really it's the high inventories in Europe, 93% full at the moment, plus 9% in the US over their 5-year average as well. The milder weather hasn't helped. The demand has just been average normal. There's nothing there. And after that huge run up we had, which was a global phenomenon and really pinched the energy prices, the price has come off massively. And other events around the world, we've got global Australian strikes, which could create a tighter supply. Electricity output could be up in the US, which would also be encouraging. So a bit of toing and froing in terms of the actual possibility, the push and pulls of that price, either up or down. And we can see this morning over here in the UK what's been going on. It's been heading south at the moment, a bit similar to WTI. Chinese news out this morning, economic news wasn't that great, so putting a bit of downward pressure on there. But we've been downtrending for the last few days in Nat Gas world. Now, what else can we look at? Well, I like to look at the US Nat Gas storage numbers. Now, last week EIA came out with more of a bearish report. We got 32 billion units there. That's, well, in technical terms we call it BCFs. That's billions of cubic feet. And as you can see, it was expected 25 billion. It drew down worse than expected, 32 billion. So that larger build put in further downward pressure on the prices. And also, interestingly, which the Nat Gas market follows quite closely, is the rig counts, like you see in the oil analysis that I do as well. You can see negative there for such a long period of time, that both that change from prior count and change from last year was positive. And I like to use the US line in there, negative there. That also affects Nat Gas. So those numbers also looking a bit bearish as well. Now, the huge driver, as you know, of Nat Gas is the temperature, the weather, and forecast predicting possibly the heat to return to the US, which would mean people turn on their air conditioning, which means electricity usage goes up, which means the demand for Nat Gas goes up as well. And that concept idea, the thought of those higher temperatures are propping up the price a bit at the moment. And we can see here, got a 6 to 10 day temperature outlook of the States. And although it's predicted and talked about that there's high temperatures, it's not near, I think, big enough across the country to impact the prices significantly. Up in the northeast, you can see it's below average, so guys might turn on their heating, but it's above average here, which is when the air conditioners come on, but it's not, to me, big enough, like I said, to really kickstart a more bullish play there at the moment. So let's head into some other technical sort of sentiment stuff. And down the bottom, let's start actually with seasonality. That's the grey shaded line there. What goes on at this sort of time of year historically in terms of price action? Well, you can see that we've had this big historical run up. Actually, that wasn't really reflected in the price action, because as you can see, it's really rather flat now after the huge sell off down there. It does start to peak up a bit, and you can see there on the left hand side around this time of year, but then it's a bumpy ride through to November, and then December, January, February, all the way down. So pretty neutral there in seasonality. Volatility. Now, what a lot of day traders forget is that Nat Gas is a very volatile instrument, and you can see, this is an annualized historical volatility. It can top 100%. So that's a pretty nasty environment to be in if you don't know what you're doing. And sometimes they call the Nat Gas trading contract the widow maker, because people don't really factor into how tricky it is to trade. But as you can see, down at the moment to about half of that, 49%. So like I said, that's reflected in that price at the moment. And then some commitment of traders data, and that comes out CFTC every Friday. We've got the large commercials, large speculators. You can see there that the large commercials increasing their holdings of Nat Gas, while the large speculators, those that are guessing the direction of the price, still coming off with their short positions, staying, like I said, with a negative point of view on the price action at the moment. So like you can see, let's just look at that chart. Really, since the big sell-off, it's been a very quiet period, 1.8 to just around about 3. So yeah, I would say pretty neutral there at the moment in terms of other factors there. And long-term price action, well, I like this chart. It just shows of the impact of the price increase and decrease that we've seen in the last year. Let's just have a measure of that in terms of percentage gain. So we had the low down there June of 2020. Price rose incredible 568% up to those August 22 highs. And then since then, what's happened to the price? Well, down to the lows, it was off at one point, about 80% before recovering or consolidating, more like, and then just sort of, we see that neutral zone, point of control at the moment in terms of price action. 2.5, 2.6, all in there. You see not a lot of volume on the way up or down, all building around where it is now and where it was historically. So you could say maybe that whole lot was a bit of an anomaly in the up and the downside, and trading where it normally should. What else can we look at? Well, we've got the 4-line break chart for shorter term price action for the day traders amongst you. 1 hour chart, 4-line break. I use the 2 2-bar reversal. So we're probably talking about 2.64 to get back into the upside. The downside still in play, but you could maybe trail an order in, under the blocks. You want to be a bit more conservative, maybe 2.6.5 possible way in there. So some trading ideas for you there. And into my favorite Renko charts, longer term or medium term view, block size 0.03. And what can we take away? Well, this covers most of it. Let's just pull that back to take in more of the year. So back into January, you can see the lows down there in February of this year. We had a nice little recovery, and it hasn't really got past that recovery. It tried to get there around August time, then pulled back once again. So a bit like oil, it's trading in a reasonably wide range. There's money to be had in that range. Like I said, $3 there down to just under 2. So you've got a dollar range from the top to the bottom there, we've got this slight uptrend in the price action at the moment. Price pulling back towards this key Fibonacci line 2.6, and that's where a lot of the volume sits. We've got a bit of an arc there, so you could see the price maybe slip back to 2.2 if it fails to hold here. In terms of upside, there's not a lot of support in terms of the volume there, so once it gets to the high of 3 again, you're going to have to see some consolidation, maybe building out the volume as a base to move it up to the next level of 3.28, 3.3. And then finally in the short term, we're going back last few days in terms of price action. What can we see? Well, we've got this slow grind downwards at the moment from that Fibonacci line there, 61.8, key one 2.7, down to 2.6, just breaking down from 2.6, maybe 2.5.5 the next downside. No volume in there at the moment over the last few days, so new territory. You can see a bit of a spike in volume at that price level there, 2.6.3 maybe, and then we got the arc back to where all that price action was in the 2.7s, mid 2.7s. And you want to look at upsides, well, I would suggest 2.67 the first stop, just over 2.7 like we just mentioned, and then into this volume area, the mid 2.7s as a potential upside target. But at the moment it's looking quite weak in the shorter term for maybe move to 2.5 more likely. So there you go, that's my brief quick look at Nat Gas. Like I said, we're going to put this in a regular slot, keep you updated, because it is volatile, it can move, weather can change, the variables underlying it, the fundamentals can flip at the moment of a turn of that switch. It's an interesting market to trade. Like I said, if you want to follow this and the other content that we produce and the live analysis and videos produced on the channel, don't forget to hit the subs and bells button to receive notification when new content is available. And all that's left for me to say is thanks for watching. Hope you tune into the next live streams. They're all posted out there on the channel, and good luck with trading, and I hope to see you again soon. Thanks for watching.